Welcome back to Return My Capital. Today we're going to take a look at four different alcohol companies, beer, wine, spirits. We're going to take a look at these. We'll compare them. We'll compare performance, have a little spreadsheet that lays it all out. It's often said that when the economy gets into uncertain times, that these are the type of companies that can actually outperform because, people are looking for an escape or, some relief from whatever they have going on in their lives. But kicking things off here, we've got Anheuser-Busch, ticker symbol is BUD. See, over the last year, it's up 13.5%. Year to date, actually up 30%. So been performing far better than the market as a whole. So, exactly what we were just talking about, you see it here, trading towards the top of the 52-week range, which is 67, currently 65. Forward dividend of $1.05 per share, so a 1.7% yield. This is the largest, I believe, of the four that we're going to look at today with a market cap of $125 billion. You'll see the analyst coverage here of the 12 analysts. You see 5 strong buy ratings, 3 buy ratings, and 4 hold ratings. See the revenue here on an annual basis, relatively flat for the past couple of years. So year ending December 2024, you were just under $60 billion. Pretty much the exact same thing for 23. A little bit less in 22. Back in 2020, it was $47 billion. But then looking forward, you see expectations for 2025. A couple million more in 25, a couple billion more in 26. So not an explosive grower, but some growth. So again, EPS growth expected for 25, 26, and 27. You see here 5%, 11%, and 14.5%. You see the sales growth less than the EPS, indicative of share buybacks, reducing that float. You see the historical growth here, a revenue CAGR for the past 3 years of 3.25%. Real solid gross profit margins, over 55%, 10% net income margins. Looking at the balance sheet for Budweiser here, a substantial amount of debt, $72 billion compared to $11.5 billion in cash. All of these businesses, we'll take a look at some of their top brands, some of their top logos that you'll see in stores, maybe that you've consumed. It's a very acquisition heavy industry. You've got a couple of the largest players that see growth in newer upstart brands and they acquire them and add them to their portfolio. So you will see that these balance sheets do carry a substantial amount of debt. Specifically looking at the dividend here, so again, let's say a 1.7% dividend yield, under a 30% payout ratio, so that's attractive. You'll see a negative 5-year CAGR on a negative 5-year CAGR on that dividend. So there was a recent dividend cut, and then you see that right here on the dividend growth history of Anheuser-Busch, commonly known as Budweiser. So back in 2017, they were paying $4.08 per share, and then that was cut in 2018 down to $3.30, cut again in 2019 down to $2.01, and then cut again in 2020 down to 57 cents per share. So dividend growth history is kind of non-existent up until the past couple of years, hopefully starting a new uptrend. But we looked at the balance sheet and saw that debt float they have. Probably a significant reason as to why they had to cut the dividend. It just wasn't healthy anymore. So now see that at a much healthier 30% payout ratio. Next company we're going to look at is Boston Beer Company, ticker symbol SAM. So this is the Samuel Adams parent company. You see shares currently at just under $250 a share, down 13.5% over the past year. On the year to date, down 19%, so not great. Over the past 5 years, down 41%, and then over the last 10 years, still down 8.5%. So performance has not been going very well for the Boston Beer Company here. Price did spike back in 2021, so around the pandemic time, over $1,200 a share. Now you see it at $243, lower half of the 52-week range, a forward price to earnings ratio of nearly 25. So it's not like this is cheap, even considering the recent very, very poor performance, and stands to reason why you see that 8% short interest. This is a far smaller company than Anheuser-Busch at just a $2.7 billion market cap. Of the analysts covering, we'll say 16 analysts and one strong buy, two buy, 11 holds. That's the predominant rating, one sell and one strong sell rating. See the revenue, a little choppy, but fairly consistent for the past couple of years. And then looking ahead for the next couple of years, looks like revenue peaked out in 2022 at just over $2 billion. For 2024, almost the same, slightly less, but still over $2 billion. And then in 2025, estimated 2.05 billion, and then 26, 2.11 billion. So EPS growth expected for the next 3 years at 4.4%, 17.6%, and 14.3%. You see the sales estimations there. If shares were to hold their current levels, you're looking at a price to earnings ratio of just over 18 all the way out into 2027. So again, valuation, even with shares falling, 10% over the last 10 years, which is just miserable performance, shares still aren't cheap. Things just have not been going well for the Boston Beer Company, Samuel Adams here, over the past several years. Profitability is okay. You've got a gross profit margin of 44%, but only a 3% net income margin. So profit margins aren't great. No dividend for Samuel Adams here, Boston Beer Company. And then on the balance sheet, it's healthy, 40 million in debt to 212 million in cash. So potentially there could be an acquisition in the future with the balance sheet that they currently have, try and drive greater future growth. But all in all, nothing really going particularly well for the Boston Beer Company right now. Next up, we'll look at Constellation Brands, ticker symbol STZ. Not too sure how that ticker symbol came about, maybe spirits or something, I don't know, but let me know if you know why. Over the past year, though, not going great, down 29%, year to date down almost 17%. So year to date kind of tracking along with what the market has been doing. Over the past 5 years, it is positive, up 13.5%, and then over the past 10 years, up 60%. So decent enough 10-year performance, but certainly trailing the market, that is for sure. Lower half of the 52-week range, which is 160 up to 265. Forward price to earnings, a pretty darn attractive 14, so a far more attractive current valuation for Constellation Brands here than both the Boston Beer Company as well as Anheuser-Busch. The forward dividend is just over $4, so a nice little dividend here, 2.2% yield, 2.5% short interest. This is certainly smaller than Anheuser-Busch at 33 billion market cap, but far larger than Boston Beer Company, Samuel Adams. Analyst coverage is mostly positive, 11 hold rating, 7 buy, 8 strong buy. You see the annual revenue there for 24. It was 9.96, almost 10 billion. For 2025, their fiscal reporting ended in February of 2025. That was at 10.2 billion. It is expected to be lower though for the next couple years. So let's take a look at that. You'll see the EPS expected for 26, negative 6% year over year. So revenue expected to take a step back here for the rest of 2025 into February of 2027. But then EPS growth expected for 27 and 28 of 8% and 8%, let's say. Profitability is pretty solid from a gross profit margin perspective, 52%. Now it is showing a negative 1% net income margin. Guessing that's because of a recent acquisition, probably driving down that profitability. Recently, you will see 11.5 billion of debt on the balance sheet and really only 68 million in cash. So, and you'll see when we look at some of their brands, Constellation Brands is a very acquisition-heavy business model. Again, looking at the dividends, nice 2.2% yield, $4 annually, under a 30% payout ratio, and they've been growing the dividend for 9 years now. So a little bit more consistency here with the dividend than any of the other 4, or I guess other 3 that we're looking at today. From a dividend perspective, they've been growing that dividend at a 6% clip year over year for the past 5 years. Here you see that dividend growth history. So back in 2015, 93 cents per share. 9 years later, we're up to $3.92 per share. So real nice dividend growth over the past decade. And We will finish up with the last of the four brands being Molson Coors Beverage Company, Coors, Coors Light, and several other brands that we'll look at to close this video out. So the ticker symbol is TAP, kind of a fun play there on a beer tap. Year to date, Molson Coors here is up 4.5%, so far outperforming the market year to date. As well as really over the past year. It's only down 5.3%. Over the past 5 years, it is up 38.8%. And then over the past decade, it is actually down 20%. So the long-term trend on this has not been positive, although recently it is trading in the upper half of the 52-week range. Now, I want you to look at this forward price to earnings multiple here of just 9.4. So this is the cheapest from a valuation perspective of the four that we're looking at today. It does pay $1.88 annually on that dividend. So this is the highest yield of the four. So over a 3% yield, as well as I think the highest short interest of the four we're looking at, almost a 6% short interest on this 12 billion market cap company. 4 strong buy ratings, 3 buy ratings, 15 hold ratings, and 1 strong sell rating. And revenue, again, fairly consistent. Revenue did peak out in 23 at 11.7 billion, followed up by 11.63 for 2024. Expected to be 11.6 in 2025, so very flat year to year, and then a decline expected in 2026 of just 11.74. So not a ton of growth from sales expected, certainly. You see, again, 2025 sales growth flat, 1% growth expected for both 2026 and 2027. You do see a bit of a rosier picture expected from an EPS perspective of 6.25%, 6%, and 5% year over year for the next 3 years. So some share buybacks going on. Again, valuation more favorable than the others. Does have a solid, not incredible, but solid 40% gross profit margin and a 10% net income margin. Balance sheet looks good enough. 6.3, almost 6.4 billion in debt, a billion in cash. So nothing great, but nothing all that concerning. Now, we mentioned the dividend, over 3% yield, almost $2 per share in distribution each year, 30% payout ratio. We've seen that a couple other times with these four. So 30% is the sweet spot for these beverage players. They did undergo a dividend cut recently, so you see that negative 5-year CAGR, only 2 years of dividend growth. So we see that cut from 2019 to 2020. In 2019, they were paying a distribution of $1.96, cut it in 2020 down to 57 cents per share, and now we are here in 2024 at $1.76. So hopefully begin a new uptrend in dividend growth. So let's take a look at these four side by side here. You see again Anheuser-Busch, Boston Beer Company, Constellation Brands, and Molson Coors. You see the varying market caps. Budweiser way out in front, far larger than the other three, larger than all of them combined, actually, from a market cap perspective. You see the valuations. Again, Molson Coors is by far the cheapest valuation, followed by Constellation Brands, Anheuser-Busch, and then Boston Beer Company being the most expensive. We covered the growth rates. Really, Constellation Brands is, I would say, the lowest expected growth, certainly for this year. And then Molson Coors as well, not exactly explosive growth, but at least steady. We covered the balance sheets and the dividend. This is the share price performance over the past 1, 5, and 10 years. And you'll notice all of them have been trailing the market. But again, we're thinking about what these could potentially perform moving forward in uncertain markets, potential recession concerns, with everything that we have going on with the government and the markets and in that space right now. But you have seen better year-to-date performance with a few of these compared to the market, certainly compared to the NASDAQ and some of the higher valuation tech names. We'll wrap things up here and look at a couple brands. You're going to notice that these are the most common brands you see in stores, bars, restaurants, and that you have consumed potentially over the years. So looking at Anheuser-Busch InBev, we've got Beck's, Budweiser, Bud Light, Stella, Labatt, Goose Island, and Hoegaarden. So some massive brands, individual brands, of course, most notably Budweiser and Bud Light, although I think Stella has been gaining market share as well. Moving to Boston Beer Company, you've got Samuel Adams, of course, and all of their different, let's say, flavors of Samuel Adams, seasonal flavors, and the like. Angry Orchard, I wasn't aware that Angry Orchard, the hard cider, was owned by Samuel Adams here. Truly, the very, very popular seltzer beverage category, Twisted Tea, and then Dogfish Head. You've got Constellation Brands. Again, this is truly a conglomerate. Compared to the other three, Constellation Brands is a far, far bigger player in the spirits and the wines. The other three are primarily focused on beers, seltzers, pre-made teas, things like that. But Constellation Brands is far more diversified across spirits and wines. That being said, they do own Corona, Modelo. I think Modelo is the largest selling brand in America now, actually. I think it surpassed Bud Light. Pacifico, Ballast Point, Casa Noble Tequila, Mi Campo, I believe that's a tequila as well. And then Prisoner Wine Company and Mount Vedir, that's a winery out in Napa Valley. And that's a very, Prisoner Wine Company is one that you may have seen in stores. And then lastly, Molson Coors here. Certainly their name brands, the Coors and Coors Lights, but they also own Blue Moon, Foster's, George Killian's, Ham's, Keystone Light, Wine and Kugel, Miller High Life, Miller Lite, Molson, Milwaukee's Best, Peroni, which I think is a big Italian brand. Let me know if I'm wrong on that. Reds, which would be a competitor to the Angry Orchard, Steel Reserve, and Topo Chico. So a lot of big name brands there. These are the companies that own those brands. So just quick little run through of the largest players in the alcoholic category. So beers, wines, spirits, pre-made cocktails, seltzers, all that good stuff. Thank you for watching. If you enjoyed this, if you learned something, do me a favor, like and subscribe. Take care. Let's make some money together. Speak soon. Bye-bye.